we have a massive week ahead for people that are invested in crypto, stocks, real estate, gold, you name it. And the main reason being is because we have a highly anticipated FOMC meeting, which is pretty much guaranteed that we're going to get a rate cut. There's been a lot of back and forth with that over time because we had a record days of government shutdown. We've had kind of like really bad economic readings. We've had no readings also in a lot of other kind of sectors. And there's just a lot of uncertainty when it comes into the overall market, the economy, and kind of what we're kind of projecting. Not to mention that there's a lot of rumors that for Jerome Powell of the Fed, he's going to either be stepping down or at the very minimal, he's going to be getting replaced next year with Kevin Hassett, who is rumored to be the next Fed chair. He is historically speaking very bullish on a weak dollar. He wants to lower the interest rates. He wants to print money. He was an ex-Coinbase advisor, if I'm not mistaken. So very good for risk on assets. And also, not to mention, we ended quantitative tightening. We started quantitative easing. There's been a lot of, money printing kind of going on behind closed doors, in my opinion, and this has kind of been reflected in different reports when it comes to the overnight markets and all that kind of stuff. But that's a little bit too, I don't want to go too much into that. But I'm saying all that to say that I think that the way that Jerome Powell is going to be speaking is going to radically move the markets. Now, I think that with all this really bad jobs claims and all this bad data, obviously we have inflation kind of running a little bit hot, but obviously with the Fed, they have a dual mandate, right? And so they have to both combat inflation and then keep the jobs basically running, right? And this is all in the back of this major run for AI, just all this kind of stuff where they're basically coming out and saying that it's going to replace a lot of jobs, and there's a lot of speculation whether it's going to actually create this whole universal income where it's high income, not just basic income. And I think that all kind of remains to be seen, but I think at the very minimum, we're in this huge arms race when it comes to artificial intelligence. I think that the government knows this, and I think that that's why there's such a big push with OpenAI. We have all sorts of NVIDIA. Google is also looking really good when it comes to their, artificial intelligence language models, and just everything is setting up for the future when it comes to artificial intelligence. And so I think that we're kind of in this really sticky situation where the Fed kind of has to really, we can't afford to be basically slow to this race, because I think that the person that owns the most amount of power when it comes to artificial intelligence is going to be pretty much the dominating superpower when it comes to any kind of fiat system or just any kind of system in general. And so there's going to be a lot of just fluctuations in the markets, and this is a number one reason why I say people should not be day trading or trading leverage, especially on FOMC meetings and all that kind of stuff. Now, obviously, it's a few days away, so a lot can happen, but the market's going to try to price this in, and they're going to move very violently. And if you're in crypto, I've been calling for a rally at the bare minimum back to about its 50-week simple moving average, which is around $98,000 to about 103. And so I think if we can kind of get up there, this might be the catalyst to do so. And from there, it's really going to be telling, depending on the price action, what direction we're actually going to head. Because I did give it kind of a 50-50. I'm actually leaning a little bit more bearish just because of how suppressed the price has been and how underwhelming the bounces have been, right? Because everything kind of looks like we're taking the stairs up and then elevator down, which is not what you want to see in in a bull market, I should say. This is kind of the behavior of a bearish market. Now, the things that I kind of have been saying has not really changed. I still think that there's a lot of manipulation going on. I think that major institutions are now stepping in and accumulating, and they want to look good for their clients. So there are reasons, in the bull corner to kind of prolong the cycle, go back to all-time highs. But like I said, there's a lot of work that needs to be done. So I think that if we can kind of hammer out this whole FOMC meeting, I think that if we can get a good kind of rally out of this, ideally, I'd love to see us close above the 105 to 106 region. That would be the only way that I would see us obviously opening up the door for at least previous all-time highs and then higher from there. So that's kind of my immediate sort of concerns, because there's a lot of sell pressure that's going to come in at those levels. And so that's going to be very telling how they kind of handle that. Not to mention, we have a stock market that continues to go all-time high, all-time high, all-time high. Now, obviously, it has pulled back a little bit, but not as much, right? And I think that the bigger concern is obviously if that starts selling off like crazy, that's where you're really going to get that, solidified bear market in crypto. And so I think that if we can basically weather the storm, because no person wants to see the economy do bad, right? Not even other countries, because the U.S. is such a key player when it comes to international trade, just fiat in general, right? A lot of commodities and assets are all denominated in U.S. dollars. And so, everyone has a vested interest in keeping everything pretty much running smoothly. So you could make the case that maybe we're going to put in some kind of like massive rally towards like the end of the year. They called this the Santa rally. I'm hoping that that's going to be the case. I'm rooting for the bulls. I hope that they can make a stand and just like kind of really push up from here. And like I said, I think if the stock market can kind of find its footing and just like charge back to all-time highs, I think that that's going to bring crypto with it. And with that, I would really caution you guys, like if you're maybe holding altcoins that you've been severely underwater in, or you've kind of learned a lesson of like, okay, well maybe I should have diversified a little bit more, and I should have been a little bit more heavier Bitcoin, and then like kept my more speculative plays and smaller amounts of investing. And so I think that in my opinion, this is going to be a really good time to kind of reallocate, or just maybe take some chips off the table, assuming that we get this kind of, lower high or whatever the case may be. Like you can always sell into upward pressure. That's always the way you want to do it. You never want to sell when things are just like bad in the market. It's just like puking, right? And so, yeah, if that would probably be my suggestion, right? Without giving financial advice. If you're somebody that hasn't taken any profits this cycle, you're very stressed out. This whole like 2 months of like downward period has like severely stressed you out, and just you can't stop looking at charts, then maybe consider taking that as like a breather if we do get this like, kind of relief rally. Because I do think altcoins are going to outperform Bitcoin if we do kind of catch this bid. You might want to look to maybe take some profits, reallocate, rebalance your portfolio, and do it in a way that you're going to be comfortable with long term. Because while I think that we could see some more bearish continuation, I do think that the 2026 landscape / 2027 is going to be very bullish. The main reason being is because obviously we're going to start entering quantitative easing. We have basically midterms, right? And so the Republicans are like really losing, in my opinion. Like I think that they're going to lose if they continue on this trajectory. And so basically they need to kind of like pull out all the stops, right? I think that they're going to have to kind of give like some parachute money, give that stimulus check. I think that they're going to need to cut interest rates, make people feel like they're richer, make that cost of living a lot less. I think they're going to have to do everything in their power to basically win over the voters. And so I think that that's going to create a lot of buying pressure when it comes to like these stocks and equities, because they need the stock market also to be looking good. Otherwise they're not going to win. And if that happens, there's going to be so many more implications down the road that could happen if they actually lose. So my bet is they want to maybe like crash the economy to make everything kind of like paved so that they can cut interest rates, they can print money, they can give money to people, they can lower taxes, whatever the case that they need to do. Like whatever they need to do to basically win midterms is, I think, what's going to happen. And both sides want to win, so they're going to be kind of throwing money at people. That's usually how it goes. And so that's why I maintain a mid to long-term bullish stance. But like I said, caution on the short term. I personally don't recommend leverage. I don't recommend taking on way too much risk. Just stick to what works the best for you. And anyway, this is my timely update. If you're not already, make sure you're subscribed, turn on your bell notifications, drop a comment below with what you guys want to see next. I'll see you soon. Bye.